Hello, I'm Lelde Smits from Modern Wall Street, and joining me here on the floor of the New York Stock Exchange is Stephen Guilfoyle. Stephen, wonderful to speak with you again.
Always glad to be here, Lelde. Thank you.
Now, the news of the week really has been those plunging oil prices. Why have they plunged so much, and where do you think they'll be headed?
There's a couple of reasons. I mean, you can start off with the OPEC meeting last week when they decided not to cut production but to actually raise it a little bit. You know, that's when the $40 level of support for WTI crude actually cracked. And we went right to 38, and then 38 cracked. So here we are now trading around $36, $37 a barrel, and the whole energy sector has caved in a little bit on that, along with rumors, not just rumors, but actual dividend cuts and rumors of further dividend cuts in the sector. It's forced a lot of portfolio managers and funds to liquidate these positions at losses. And when they do that, they also have to sell stocks they have gains in, because in order to take a loss for tax purposes, you have to have something to put it up against. So you have a double whammy here where these guys are selling their losers and their winners, and you've seen the market have quite a rough week here.
So how has this changed your view or approach to any oil stocks or exposure you have in your portfolio?
You know, I have traded oil in the past. I have traded the energy sector pretty well this year, actually. And I do like dividends. But now that the dividends are in play, even though it does seem like maybe they've bottomed here and some of these stocks might be in rally mode or ready to go into rally mode, I'm probably going to take a wait and see approach towards the energy sector, at least for the rest of this year. And when I finish my model for 2016, there may be a place for them, but I'm just not sure how much of a percentage it'll be.
Now, Stephen, the news of this week may have been oil prices, but next week there's only one thing traders will be looking at, and that is the Federal Reserve's interest rate decision. What are your expectations? And following that very strong jobs data last week, what are we likely to see next week?
Well, tomorrow we have retail sales, and Tuesday we have the CPI. And both those things usually matter, but they're not going to matter this time. All right, I think Janet Yellen was pretty clear on what she intends to do. It seems like she has taken a leadership role and kind of hushed the doves, so everyone pretty much has their ducks in a row. They're going to raise the Fed funds rate a quarter of a point unless something awful happens between now and next Wednesday. And they're probably going to talk extremely dovish after they do so to try to settle the markets and make sure everybody's okay with it. If we don't get a small hike in the Fed funds rate, I think you'll probably see a very negative reaction on Wall Street.
Okay, and finally, if that decision does go through, as many are expecting, and rates do increase next week, what is your year-end target for the Dow and the S&P 500?
You know, originally my year-end target for the S&P was 2150. And, it doesn't look like we're going to get there at this point. We're still about 100 points away. I wouldn't give up on some kind of year-end rally. I think after we get out of this tax selling season, and if we can get oil to stabilize, I think we can still get a late run. And I think we do have a shot at least getting close to 2100, if not over it.
Okay, I'm sure many will be hoping that we can end the year on a very positive note, but thank you so much for ending the interview on a positive note, and all the best.
Thank you very much.